Following the latest quarterly earnings results, Meta stock dropped 25% on a single day. Since then, the stocks of Meta Platforms, formerly known as Facebook, is down over 31% in a mere 1 week and down over 42% from its one-year high. In this video, I'll share with you why this is a massive buying opportunity, which I'm taking full advantage of by buying shares of Meta Platforms, and why FB stock could be an excellent investment opportunity. The reasoning behind buying the FB stock is in line with and based on an excellent article that I've read on 𝗖𝐋𝐈𝖖 called Meta Buy When There's Blood in the Streets. I will add the link to the article in the description of the video, and be sure to check it out if that interests you. Let us review the key highlights from this article. When Meta reported its last earnings, if we were to focus on their annual results, they reported a total revenue of $117.9 billion in fiscal 2021, compared to only $85 billion in fiscal 2020, showing an increase of 37.2% year over year. What's more, income from operations also increased from $32.7 billion last year to $46.7 billion in fiscal 2021, which is an increase of 43.1% year over year. And finally, their diluted earnings per share increased from $10.09 in 2020 to $13.77 in 2021, or an increase of 36.5% year over year. If you look at Meta's quarterly results, though, it shows a different picture. While total revenue increased from $28 billion in Q4 of 2020 to $33.6 billion in Q4 of 2021, this only reflected 20% year-over-year growth, which is the lowest growth rate since the Q2 of 2020. And income from operations decreased slightly from $12.8 billion to $12.6 billion, a decrease of 1.5% year over year. Diluted earnings per share also declined by 5.4%. Additionally, the number of daily active users worldwide declined for the first time from 1,930 million in Q3 of 2021 to 1,929 million in Q4 of 2021. However, keep in mind that this only takes into account Facebook users and not other products that is offered and owned by Meta Platforms. While revenue still increased with a high pace, expenses also increased with a high rate, especially costs for research and development. That increased from $18.4 billion in 2020 to $24.6 billion in 2021. Cost of revenue also increased from $16.7 billion in 2020 to $22.6 billion in 2021. And management is also expecting high expenses for 2022. In 2021, total expenses were $71.2 billion, and the expenses in 2022 will be about $20 billion higher. Meta is trading currently over 42% below its previous all-time high, which is one of the steepest drops that the stock has had in the last 10 years. In 2018, the stock declined 43% as a consequence of the Cambridge Analytica scandal. And in the months after the IPO in 2012, the stock dropped almost 54%. Right now, Meta is trading for 17.2 times earnings and for roughly 17.3 times free cash flow, which is clearly below their 5-year average of price to earnings ratio at 29.64 and the 5-year average of price to free cash flow ratio of 31.46. And when trying to calculate an intrinsic value by using a discount cash flow analysis, we can only come to the conclusion that Meta is undervalued. Analysts are expecting earnings per share to grow with a high pace between 9.37% in 2024 and 26.34% in 2025. Also, the annual revenue for Meta is estimated to be at $132.6 billion in 2022 and $156.3 billion in 2023, the highest revenue they've ever reported. Meta will certainly generate the biggest part of revenue from online advertising. Meta is in a dominant position and has a market share of 23% in the global digital ad spending market. And estimates see that Meta's market share will be increasing in the years to come. When looking at Meta's core business, their family of apps, almost all revenue in this segment is generated from advertising. However, since Q4 of 2021, Meta is reporting in 2 business segments. And the second segment is Reality Labs, which is including augmented and virtual reality related consumer hardware, software, and content. And while this segment is contributing only a small portion of the overall revenue, or about only 2%, it managed to double revenue from $501 million in 2019 to $1,139 million in 2020, and again to $2,274 million in 2021. Another way to grow for Meta are their share buybacks. In the last 4 years, the company has decreased the number of outstanding shares from 2,962 million at the end of 2017 to 2,808 million at the end of 2021. The company therefore decreased the number of outstanding shares with a compound annual growth rate of 1.76%. And considering a free cash flow of 39,116 million that could be used for share buybacks, in theory, Meta could repurchase about 6% of its outstanding shares and contribute 6% to bottom line growth by share buybacks. Meta has a wide economic moat around its business, and while the network effect is the most important one, the company can also rely on its brand name, its embeddedness, and the ability to scale. And when looking at Meta's margins, we also see a rather stable gross margin as well as operating margin. In the last 5 years, return on invested capital was 24% on average, which is a high number, also indicating a wide economic moat. In case of Meta, 33.1% of revenue ended up as free cash flow in 2021, which is underlining its ability to generate huge amounts of free cash flow. If we just assume 6% growth from 2023 till perpetuity, assuming free cash flow in 2022 remaining the same, we get an intrinsic value of $349.37 per share for Meta. And in an even more optimistic scenario, you still assume the same free cash flow in 2022. But for the years 2023 until 2031, we assume that growth rates will slow down from 15% in 2023 to 6% in 2031 and will remain at this level until perpetuity. This leads to an intrinsic value of $503.98 for Meta, and although this might seem extremely high and unrealistic, when looking at the current share price, it is a possible scenario. Are you buying shares of FB stock at this time? Let us know in the comment section down below. Be sure to check out the source article for more information about FB stock and its analysis. If you learned something new from this video, please give it a thumbs up and share it with someone who might benefit from the video as well. And subscribe to our channel for more videos about investing, finances, and ways to reach financial freedom. Thank you, and I hope to see you next time.
I make suggestions, you make decisions.
Oh, is it hot in here?